hello, hello. All right, sorry about that. The wheels on the bus decided to knock the coffee over. So yeah, lots of hand movements today. No, no, we're not gonna touch that. No, no. So I have milk splashed on the keyboard. I got milk splashed on the monitors, and we lost coffee. So I had had to grab that one real quick. Anyway, so yeah, that's how the morning's starting off. No, stop. No, no. You watch your show. You watch your show. Leave me alone. Um, all right. So right now, biggest movement on the board is the pound yen. Stop. Yeah. Yeah, we're at the terrible twos before we even turn two. Anyway, we're seeing pound dollar up, euro dollar up. We talked about dollar weakness yesterday. We're kind of seeing it across the board, except the dollar yen holding basically flat. Dollar Swiss down just a smidge. Dollar CAD down just a smidge as well, about 24. Aussie dollar up 18. So we're seeing the dollar weakness. The data actually came in as expected. We were talking about the final GDP number is actually missing, right? Yesterday we said, hey, listen, don't be surprised if it comes in 2.2, it's dollar weak. If it's 2.1, meaning there's no change, it's also coming in weak. Unemployment claims, they came in a little bit lower than expected there, so that's fine. Yeah, call for mama. Yep. Okay, go ahead. Go find mama. Go ahead. Not here. Go ahead here. Take your play. Go ahead. Yeah, mama. Yeah. This is our new thing. If he gets yelled at, it's the calling for the other parent, like, "Oh, I'm gonna tell anything." It's kind of funny though. Um, yeah, oh, so many lessons learned. But anyway, it did come in exactly as expected. It didn't rise at all, and again, they missed there. Now, this is the big surprise of the morning: the final GDP price index, and you can see it sounds really, really. It's like, ooh, this is a good one, right? Annualized change in the price of all goods and services included in GDP, but you can see it's only an orange. It's not considered a major. Um, it's a little bit weird, right? It's not as good as the core PCE data. The core PCE data, just so you guys know, is the change in price of goods and services purchased by consumers, again, voters, excluding food and energy, right? And again, if you add food and energy into that, we know what the heck's going on with oil. So, again, it sounds important. It's not actually as important as you would make it seem. Powell is talking later on today. There are some people, Goolsby's like, that's it. We did it. Pat us on the back. We're done. We don't need to do anything else. And, we got it, and only modest slowdown in growth, and growth is not really there. The 2% goal change would hurt Fed credibility on target. Tying policy too closely to labor, GDP risks there's a downturn. Too much weight on past experience, risk policy error. China slowdown, oil price, shutdown, or outlook risks. Yeah, but you have no control over China slowdown, and because of the China slowdown is the oil price. So I don't know. Goolsby is yeah, don't know. I wouldn't pat myself on the back yet because we're seeing inflation rise across the board, right? Across the entire world, we are seeing it rise. So those are light bulbs. We don't play with light bulbs and everything. So yeah, I don't know that we can claim it. I think again with it's nice that we have all these food and energy, but we know where all the original inflation came from, and it was energy, it was gas, and yeah, where's it at? Where's it at? Where's it at? 95. We touched 95. We talked about 95.10. We made it up to 95.03 is where we made it. So we got really, really close. We knew that 95 was going to be a big deal. And yeah, came up, tagged it, and thankfully pulled back down to 92. So yeah, well, fun. So we'll also get some data out of Tokyo tonight, out of Japan. And again, it's actually expected to drop. Tokyo was the one kind of I guess a little caveat out there. Excuse me. Ugh. See, this is what happens when you spill my coffee. It's yeah, seeing it drop a little bit is great on a yearly basis. I wish everybody was doing that, but that's unfortunately not what we're seeing. Tomorrow morning, we got a lot of stuff early, all the European flash data out there, and you can see expected to drop out there on a yearly basis, coming back down, and again 4.5, 4.8. It looks great compared to like the 9 that it used to be. Remember, Europe was a little bit behind. They didn't have the same type of peaks as the UK and the US did, but they're still well above what the 2% target is. Over double, actually. So again, is it slowly rising? I mean, if we take just the core number, right? And again, that's the core number is minus, fuel costs. But if it's going to drop, zero point 0.5, it's still going to take another, what, 6 months or so until we can, I guess not 6 months. What, 3 months, 2 months? until we can get back down to that 2% on a yearly basis. And that's if it doesn't rise. And again, we know with fuel costs going higher, it will be there. And then also we have CAD GDP expected to be a little bit good, and then obviously the PCED, which is the PCE is the preferred inflation gate for the Fed. Although it's crazy. I saw an article this morning. They're like, although it's their preferred method, they're going to ignore it this time. I'm like, what? They're just magically going to be like, nope, that's it. We're good. We're done. Um, we got strikes going on. We're gonna have problems with the auto, and again, maybe the auto industry fixes the, you don't have to raise because of that, right? We had bank failures that lasted for a week, and that kept us from raising briefly, right? Briefly, and then that came back, and then after that, what do we see? Now we have a strike, so maybe that's it. I can't tell you, I mean, DC's in a buzz right now with the government stoppage, and there's stopgaps that have been put in, temporary fixes, and they've removed the Ukraine stuff. Some of the Ukraine funding, but whether it makes it through the other side is probably slim to none. So, there's all that out there. That'll be the story of the weekend. So, is a point 0.2 or point 0.3 difference in some of the data really going to make many changes when we have a government stoppage looming? Not really. And it's funny. There's the external side, but then I get to see the internal side too. Not me personally. I have friends inside of the government, military and stuff like that, and they're like, yeah, it's being forecast. There's a 98% chance of a shutdown. So it's like, they're preparing for it, and they have their different tiers that they got to follow and stuff. So it's kind of crazy listening to it. Being on the inside, being told that, yeah, like, hey, listen, you're considered. I forget what they told me. There's essential personnel, and then I guess there's critical personnel. If you're critical, you have to show up to work. And I don't know how this works. It's like, yeah, you're being, you're considered a critical employee. You have to show up to work, but you're not getting a paycheck, just so you know. It's going to be delayed. We'll pay you sometime when it gets back open again, but you need to show up. It's like, wow, imagine that in the private sector. You're not getting a paycheck for a while, but you're going to show up and work, right? Yeah, I don't see that going well. But yeah, government shutdown looming, and we're worried about auto workers. So there's some craziness going on, and I think that's going to start dominating things out there. Whether there's an agreement, not an agreement, is it something that is a stopgap? Is it a permanent fix? Yeah, a lot of stuff going on right now. So some of the Fed's job, as far as reaching, Goolsby maybe not a complete idiot, right? Talking about we're seeing inflation reaching target. It may be, but not necessarily because of anything the Fed's doing. It may be because of, thus far the economy has been pretty resilient, but things like strikes. What is that going to do to the GDP? Well, that's going to bring the GDP down. We already know it, but it's not. And I mentioned this before, I think last week. The strike is actually going to hurt the GDP, right? Because the auto industry obviously is a big part of that. But is it a real drop in GDP? Right? Is it a real drop? I mean, in 2 weeks from now, if the strike is over in 2 weeks, right? Yeah, there was a temporary drop, but guess what? It's going right back up to where it was, and probably a surge to make up for that drop. So it's kind of misleading data, talking about, hey, we're there. We've only had a little bit of problems. Like, nothing the Fed is doing. What the Fed has done is not affecting what's going on with the strike. So there's that to kind of to kind of grapple with. All right. But again, tomorrow morning, some decent data out there, things we need to watch. Also, you see this over here, embracing AI. Supposedly, allegedly, there is an executive order coming out from Biden talking about how we need to control AI. Some type of, I don't know if it's an AI regulation bill or whatever, but yeah, there's an executive order coming for AI and about how we're supposed to lead with AI. The AI regulation. The problem I have with this is, yes, I guess there's responsible AI, but at the same time, I don't know that we're our own threat for AI, if that makes sense. Like, if you think about it, there's all the downsides of AI, and people are like, no, you have to embrace it. This is the future. This is what it can do. All these good things, and yes, the Terminator and all those things are the bad things. I don't know that we are going to create Skynet, but does that mean that China won't create Skynet or Russia? And as far as us leading the way, does that mean that they are going to follow? No, not so much. So I'll be interesting to see when that comes out. But we may be getting that in the next day or two, and that may jack around the stock market as well. All right. Let's go back up and start with the VIX. So the VIX. VIX is still holding up here over 1850. It's not broken through the 1950 mark. That was kind of the peak yesterday. So honestly, the VIX could be worse than it actually is. Um, it could be. It could be. It's not as bad as what I think it could be. Hmm. I feel like today it's going to probably hold up here. Um, again, with the core PCE tomorrow as a true gauge, um, it's hard to say that they're going to, they're going to ignore it. Doesn't matter what it says. You know, if the core PCE data, even with oil prices the way that they are, if it goes up, I think they're going to have problems. It's hard to ignore that if that one goes up again, right? Because remember, it does have food and energy removed from it. So, um, yeah, it's kind of hard just to ignore it. I feel like. Um, Knowing that the oil prices, I mean, again, we haven't seen gas go crazy. Last time, it was up here. We were talking about gas and over 4, and it's not quite there yet. It's holding okay, um, but I feel like it's just coming. I feel like it's coming again. Maybe it's not over 4 because we're in cheap winter gas. Could be. Dollar obviously pulling back again. Again, we kind of peaked yesterday afternoon at about 2, and you can see that the European market was not fooled and just shot it straight down. And we had a quick, spike up and drop it. We're down 0.25% in the dollar, and 106.38 is still pretty high on the curve. I think it could come much, much lower than that. Um, yeah, definitely could get more movement in this one. As far as where it goes today, I feel like, I feel like that surprise data, the 1.7 number, I feel like that will help this one. I feel like this will help grind it back down again to the downside overall. Do I think that, that number, do I think that this final GDP price index, do I think that's great for the economy? Not really. Um, but overall, it's not the worst data. But I do think it does hurt the dollar because people are looking at this and it's like, oh, final GDP, we're hurting over here, we're hurting over here. I mean, I think the big question is we're not where we want to be inflation wise, right? And this helps a little bit, but not PCE. And the question is, does this show us that I am? But again, labor is strong, and that's always been a driver, the labor part. So yeah, yeah. Hmm, I don't know. I don't know. Anyway, dollar down, indices 3 down, 1 up. Hold on one second. Um, okay, cool, awesome. All right. Overall indices today, will they be more up or down? The labor market's still showing strong, and that's been a big thing for the Fed. I think the GDP number is great, but overall, I do think that it's probably more. I would say more of a flat day. I don't think people are going to understand how to read anything today, and it doesn't really tell us a whole lot. So I think it's going to be probably a little bit more choppy and maybe a little bit on the bearish side. Again, the market was bearish because again, you know, we are not, cutting interest rates this year, but again, if PCE is hot tomorrow, I feel like that just tanks the market. So I think it's going to be kind of again, kind of a choppy, day back and forth. You can see Apple down 0.75%, Tesla up 0.6. And again, I think Tesla right now is getting some artificial kind of pushing. It's up, but it's still basically where it was in the area. Commodities for the most part are down. Gold, silver, flat. They're basically where they were yesterday. Gold down just a little bit, silver trying to get a little bit positive out there. Again, weaker dollar, you expect those two to raise. Natural gas on crack. Natural gas is up 1.76%. Again, we're at 295. It's like, really? Oil, though, thankfully retreated back from that 95 mark. So as far as the Aussie dollar goes, you can see it is rallying back up, or it's rallying right now. This is what it kind of looks like. We had a little kind of a bounce and a little bit of a Harry Potter aspect over there over the 23. We can remove it. We are playing right now with this same area, right? And you can see it kind of hit it and push down, kind of hit it and push down again. Um, As far as clean levels, I think 64.28 again, the same level tested as yesterday. There is another level in here now that is pushed all the way down, and it peaked yesterday at about 130. There is a zone sitting right there, and again, that's not a green. That would be more of a red based trade. Um, I think if it can do one more surge, I think it reverses. I really don't think that the dollar is going to remain weak, particularly with that PC data coming in. But you can see it is absolutely having problems with this trade from late Tuesday night. So again, if we are going to reverse, it's 10 o'clock. There are some sellers in here. We've smashed into it. We pulled back down for reinforcements. We hit it again and pulled back for reinforcements again. I think if we start making another surge, this level has the potential to fail. But the question is, how exhausted is it going to be? How exhausting is it going to be? I'm gonna put a tag on that one. I think the 68 right there. I think this one. I think that's the next rollover point. It's only got about 24 pips. Yeah, turn it down, bud. Hold on one second. He just jacked this out. Hey, too loud. Go. All right. If we don't turn here, I think 64.15 is where we pull the trigger. Again, it is 61 if you go from high to low in the last move. It's there. It's a decent. Again, it really hasn't been. There's a little base there, and it was a little chop, but again, that was a nice kind of surge, and it's the most. It's the next clean level with a little bit of help in there. All right. Aussie yen also pulling back up again. Now we did have the data in here, and again, data didn't really do much. We're looking for some type of a Harry Potter call over here, and again, it just really kind of chopped through. So nothing really there on the bottom. Right now, if I had to mark top and bottom on this one, again, you can see we're chopping back in, and again, sellers here, sellers here, sellers here, seller here. There's a lot of sellers. Um, where we are right now, I would say start thinking bearish on the Aussie yen. Reason why is because the Aussie dollar is also in a position. Um, Go with the top side there. I don't like this. I like the candle formation, but it's peaking higher, so it's running into this zone, and that zone's almost gone. Hmm. Hmm. I think too much of that zone's gotten eaten up. Um. Yeah, the only thing that had this one has going for it, it is backstopped by the 78.6 a little bit. But again, high, high, higher. It's going this direction. And it's eating up the levels here. And again, one strike, one strike, one strike. It's four strikes. So I really feel like 96, 95. I'm sorry, 95, 96 is probably where this one rolls. Now, there is obviously sellers in here, right? It's hit, and it's chopping back and forth and it's fighting. But just like the Aussie dollar, if we start to get that weakness coming in here for the Aussie, they both should roll at the same time and they should push back to the downside. So, hmm. Yeah. I, unfortunately, I don't want to use either of these two zones, but I am looking for this one to go. I prefer if it goes up a little bit more. It's only 19 pips to blow this level up. Not too much. It's got a 30 pip daily ATR. Um, I need a catalyst. I just don't have a catalyst. I'd love to give you guys a short here, but I just don't. I don't have one until we get back up top. Again, too choppy. It should break through. Again, I'm very hesitant to be able to use this zone because it is the third touch and it is pushed higher each time. It should go higher and it's only 6 pips left. Ugh, yeah, love to get something. Right, love to get something in there. Just don't have it yet. There's where we're at with the euro dollar. So euro dollar, we're trying to surge back up again. 105. It's a level that we talked about before. Again, it was a Harry Potter yesterday. You can see we triggered early morning. We were out yesterday right at the time, and we bounced off the bottom section. We mentioned 104, 104.95, and it hit at 1:30 in the afternoon, and then we kind of based off of it and started the rally back up again. So where we are now, we are pushing through and kind of playing with this 23.6 level. Honestly, I like the 105.90 or 69 better. It's been there a few times, but that was really the takeoff point for it. Again, you can see really from the European Open here that we're up about 62. That would be 77 pips up. It's got a daily ATR of 67. So that's a decent day's worth of movement with profit taking. If we can get the right pattern over here, the right candle formation, I think this area could be another short. And kind of turning and rolling from that level. We still got a little bit of room to run, right? We got about 25 pips on it, but I feel like that's probably where the reversal comes in. I mean, yes, we have dollar weakness today, but again, tomorrow's data is a big one. It is what the Fed prefers. When we talk about preferred, that is it. That's their biggie, right? I feel like there's going to be a lot of emphasis on that, and I expect there to be some pre-movement today. And again, if they're going to ignore it and it's supposed to be weak, we should see the dollar kind of re-strengthen a bit today, as it prepares itself for a short trade tomorrow. So that's kind of what we're looking for. And again, Europe's data tomorrow, right? We have this right here, 3.5, not bad. This German data looks sketchy at all. Again, that should all be weak. That should all be weak euro. So again, we're kind of lining up for that weak euro with all this data over here, and kind of looking for these to kind of push from kind of here, right? Yeah, from there. So kind of looking at that. So euro dollar is a very interesting trade setup. It's something that I would watch throughout the day. But if we do tag this at like 12, 1 o'clock, I do think it could be a reversal. And again, maybe we see this go down and we see European strength come out of the news releases tomorrow. But again, I think it's probably a decent bounce now. It doesn't line up with any other levels as far as fibs go, but decent reversal spot. I'm just looking for this guy. Just like, give me this from there. And again, was a confirmed trade from yesterday. Euro pound. So again, you're seeing this one kind of pull back again. What are they saying in here? Massive. Yeah, nothing in there. You can see a little Harry Potter action going right here. We knew we had a run right here. Unfortunately, I hate to say it, this was a no entry. Right, this was a no entry because once it started to form the base there in front of it, you needed to move this up to here. I guess you could have taken the whole thing. I guess you could have said, "Yep, I'm going to take the whole thing in there." It's only 11 pips, right? But it does look quite large compared to the candles because it's this pair. It's a 4-hour ATR is 15, so that's almost a 4-hour zone. Again, 4-hour zones a little risky, right? A little risky. Where this one goes right now, again, we're seeing the euro surge. With the data tomorrow, I'm okay with the surge today in the euro, with anticipation that it'll be more of a week-based trade tomorrow. So I'm good with this one. Remember, euro pound, it's not moving a lot. It moves 40 pips a day. Not tons. Again, we are pulling back up, and if I had to adjust this one, I would adjust it probably to where the tops are there, where the bottom of these things are, right? Bottom, top, top. I'd put it there. So could this continue to push? Sure. It turned exactly where it should have, right? There's all your buyers. You look across, boom, that's exactly what it ran into. So yeah, it's a decent pullback. Kind of like getting more short tomorrow than anything else on this one, right? I'd like to see a pullback. Let's see. We'll run from top to bottom fib wise. You can see that kind of backstop there a little bit. It didn't even slow down at the 23. It's kind of backstop. So maybe if we get some basing in here, and it's probably going to be shorter. If anything, it's probably going to be like that if it does anything. Again, it is backstop by 50, so that's a decent reversal level, but I do like this one short for tomorrow, going into that news release. Euro pound, again, coming back up. We mentioned this yesterday. There was a level around the 50. It did go much lower. Now, blew this bottom section up, and we were able to kind of see the chop going through that one. We were marking it off because we wanted to see if it was going to be the true bottom. It ended up going lower and it grabbed the 156.78. Actually, it made it down to 156.70. Went 8 pips down, and it looks like, hold on. Yeah, it did. It grabbed the same buyers. It grabbed the same set of buyers in there. We had marked off the entire level, but it grabbed the same buyers as last time. So decent pushback up again. You can see right now we're at a level, this 157.53. Again, euro in a position of weakness, coming back up in an area backstopped by the 61.8. This zone's a little bit big compared to some of the other trades. Actually, I guess it's not bad. It's 12. All right, looking at these. And this is that same European weakness, and this one just triggered a little while ago. Right? And there's your 1 to 3. Just it's taking you through the news to push back down to where the buyers are. So it's not bad. 12 for 36. Could be a worse trade. Right? Pound dollar. All right. So pound dollar. Okay. Here's the European Open. And again, yesterday we knew this was going to get chopped through. Right? We talked about that chop, and it looks like 2 o'clock in the afternoon is when we grabbed the zone for the Harry Potter. Right? And again, we're looking for the far side. It bounced off it, which is great. Love that. I'm super happy. Love the fact that it grabbed it, which means next time, again, there's less buyers in there again. Now, it did pull back up. Now, this one kind of had a choppy start at the 8:30 window. There's a zone here. Now, to draw this zone, you're pretty much going to draw it this way, right? There's the zone. There's the pop. So it did actually grab it and go to the downside. I was a little concerned about this one. I did not take this one. When you see this data in here at 6 o'clock, you guys see this right here? This level of basing right there. When it started basing, it was like punching up, but it was forming buyers. I was like, oh God, what if is it preparing to come down and grab these buyers and take off? I actually didn't expect those guys to break. I expect those to held a little bit more, but it didn't. It ended up breaking. The data was strong enough. I mean, it's kind of dollar strength based data, right? When it shot down. But from that level, I kind of like this one for reversal as well. I don't think the pound is inherently strong right now. I do think they have all their own problems. I like them better than the euro. And again, the euro pound going to the downside isn't necessarily strength coming in from the pound. It's just European weakness coming in is more what it is. So, yeah, I like this one as a reversal, but we need that confirmation. We don't have it yet, right? We don't have it. Again, 23, it is at a level. It is already pushed down. It would not have made a 1 to 3 yet. It was pretty close, but it wasn't quite there yet. Um, and again, we're playing with 122. So 122 kind of, let's see how close. Where's the 122? So the 122 is sitting right here. So unfortunately, that's what we're playing with. Yeah. I think that's right now. That's the 122. So yeah, I like this one as a reversal. And again, right now we have a red, we have a green. The red closed below. We're not in a reversal. No confirmation yet. The green, red, and the green is higher right now. Again, the green closes here. We're not in a piece. So technically, right now we're still kind of in an uptrend. I mean, the green, red, green with this green and the red closing below shows that we are now sideways. So we're officially in a sideways base movement. Um, so yeah, that's where we're at. Where we're at. Pound yen. Let's see if we can get help with there. Yeah, same thing. Surge up this morning. Didn't make it all the way up. Hmm. Kind of like the basing that's forming right here. How much is that? Push that back. Actually, Sorry, the truck is getting fixed again. I don't know if I told you guys. It was coming back again where it sounded like it felt like the steering was failing the same way that it was before. Like it was grinding whenever it would pump the brake or like turn the wheel, right? Especially like not an extreme level, but thing. I took it back in. I was like, listen, it's the same thing again. It's going to fail. And he goes, well, good news is it's not the steering this time. It's the cooler, the cooler for the I guess hydraulic system or whatever. Of course, it's something costs money. It wasn't a free fix, of course. I'm actually wondering if this was the problem the first time because he was like, "Oh, the steering was loose and this and that and the grindy from the time I had it, from when I first got it." I'm wondering if this is the problem originally. Would have been a much cheaper fix had he uncovered that one, but yeah. And Melissa has the car right now, so she's trying to coordinate. Hopefully it's done today. Who knows? Yeah, there's probably a little Harry Potter in here. I like the base in here. If we can get a base and pull back, probably pretty decent. Again, we'll see this pull back again. I don't think inherently this is necessarily the pound. I think this is more the yen. With the data coming in too, tomorrow with the pound or with the yen, or later today, maybe we get some movement on this one. This one's okay. I would say this is probably like a B-rated trade. Again, we're not quite there yet. We do have the red, green, red. I mean, again, if we get a close, it's not quite close below, but we've pushed. And again, if we close here, there is a trend reversal put in on this one, so we should see this one turn and kind of push back to the downside. So we're kind of there, right? We're kind of there for a reversal, and all it does is brings it back down to the 181 mark, which again I think the 181 mark is probably pretty decent. I don't think that's the worst of spots. There are worse places that we could be with this one right now, and I think that one is I think that's an okay spot. Like I said, I'm good with that one. So look for a reversal. Dollar CAD. Remember I said this was going to chop through? It did. It didn't go up twice. It went down twice. And now we're just chopping through. Again, 134.95. We really haven't moved much. It's minus 0.03. Where are we different? Minus 18 from where we were this time yesterday. But again, we knew 135 was going to be a big level. I thought we would get more of a bounce yesterday, but the end result was, again, I expected it to come through and then chop and bounce, and it did. It went 1 and 2, and now it did 3. So instead of 1, 1, it did 1, 1, and then 1. We're here. So we're pretty close. I mean, I drew it here. Look how close I am, right? I'm pretty close on that one, where I expected it to be. So it probably continues to move around. I would be very cautious with dollar CAD tomorrow, particularly for core PCE. Reason why is because there's a lot of other influences in here. Again, core PCE data, the one they're looking at, excludes fuel. But I think it's really hard to deny that fuel costs are definitely on the rise from where they could be, with them being higher than what we technically like right now. I do think there will be some spillover inflation where we will start to see inflation rise, and it's nothing the Fed can do because it is more, it is more oil based. We had a down draw, and like I said, I think if China stays weak until December, great. But right now, we got 3 months to go, and the cuts are staying in for 3 months till December. I think that can go. I don't think Saudi Arabia's magically going to say, you know what? Because prices are so high, we're going to. No, they're not doing that. So I think be very, very cautious with the dollar CAD tomorrow. Again, no movement. Not too bad. I was almost right on there, pulling away a little bit, right? But 135 is going to be a magnet for this one right now. So not a whole lot we can do with that. Dollar Swiss, again, pulling back down again. We wanted it to go a little bit higher, but it's pulling back down again. We can run this back up. Like I said yesterday, I expected dollar weakness to come in. It's kind of doing that right now. It's pretty grindy from the top of this one. It's about 60 pips down. The peak yesterday was, again, 2 o'clock in the afternoon. That was a reversal. And again, the red, green, red didn't come in here. Red, green, red. The first actual confirmation, right, is actually right here. There's your red, green, red right there, right? And it kind of pushed down and kind of pulled back, and it attempted to do it. So, so it's in. They're there. Trying to think, do I want to use any of these levels? Yeah, Harry Potter off that one. Not interested in taking that. Definitely a lot of basing. I have to keep moving it around. Like you guys can't see it. Remember, I said there's milk on the monitor, so it's like he like flicked his sippy cup and it shot milk drops. I have a milk drop here, 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 and here. So I'm looking at it. I'm like, wait, what is that? I have to like move it out into the clear area. So if you're wondering why, like I'm situating things over here, because yeah, Kipster decided to play with the straw of the sippy cup and flick milk, and I couldn't get it. I couldn't get the monitor, the electronic wipe stuff ahead of time. So I'm dealing with yeah, cannon fodder here, right? Cannon fodder. So that's why I'm moving it over. Um, I don't really love this one. I don't really love this one. Probably the target right now. Probably our target. Only because we went like this, we popped away, and then we touched it and went. Um, I'd say that's probably our target for the dollar for tomorrow. If we can continue to deteriorate with strength today, I think this could be. I think there could be the potential for a move here if we can be there for news. Right? Which we got to move. 46. It's got a 56 or a 55 pip ATR. Spam. Yeah, no, I'm not clicking that one. Thank you for your billing department with a fake address. Not interested. 1 sec. Yeah. Yeah. So I think we look for that. I think 91.20. I think it's a decent reversal point. Look for it to deteriorate down again. If we get there for news, I like that one for a takeoff point. Yeah, 15 pips. I think that's a pretty decent one. So that's the best thing we got on there. Again, I'm on an hourly chart just in case you guys are wondering. Dollar yen. We talked about chop back and forth. We were said somewhere in here. We're looking for a base. Yesterday we're in there, but we didn't get the actual top. We got a red, green, red right here. There's your red. There's your green. It did not come as high, and there is your close right there. Right there's your close right there. So, and there's your test. So there was the reversal in. Again, we were looking for it. It's funny here. There you go. So, again, sometimes you got to wait for the pattern to form, right? We have these zones, and again, when they're really, really far back, we got to make sure that we're in there with the right proximity. And the right proximity is in. Look, I almost got the bottom there. Look at that. I missed a buy. How much did I miss that one by? 3.9. So there's a reversal that we called for. Let's see. What do we do with this one tomorrow? There's probably, I would say this is probably your target right now. It's the last time that there was any decent buying in that one. That's probably the best. I would say that's our target area. I don't really like it for a Harry Potter. There is basing here with a push. Um, I wish there was a better. I wish there was another setup. I wish this was clean. I love to take it short there, but I wish that was clean, but it's not. So we're talking about 48 pips on that one. It's got about a half day's worth of movement, 2 4-hour ATRs down. There's enough news tomorrow. I think this will be a tricky play, but if we're bouncing around that 23.6 level, it should be easy enough to see. I think that could be a decent bounce point. So kind of keep track of this one. Again, I think this one is you know, pretty dangerous to look at. Um, yeah, I, potentially a dollar long base trade out of that one for tomorrow. But right now, again, I think that's your target for the downside. You could probably run that one a few hiccups on the way down. Again, the pattern is in. So, from the actual kind of retest, you're up about 40 pips. So decent spot, decent spot. Crude. We talked about crude. So crude, we mentioned 95.10. It looks like 90. What was it? The high was 95.03. So it kind of came up. It gave us a red, green, red right here to tell us that there was a confirmation in. Right there's your red, green, red right there. Didn't retest, unfortunately. There was a little bit of a Harry Potter in here. There was basing with a pop. Um, That's kind of what it looks like. Is it super clean? Nah. Was it there? Yeah, it used those again. The old buyers became sellers, um, looking for a pushback to the downside. So crude has the same thing. Not a lot over here. I love it. Oil bulls strike back. Boing. Let's see. The good news about this one is, if you look to the left, yeah, there's a lot of chop in here. There's a lot of wicks going up to the top side. Um, this zone right here, this basing is backstopped by the 23.6. As you guys know, again, oil extremely technically traded market. That 23.6 level, I would say, is probably kind of like a bottom for buyers. There will be people absolutely stepping in right there. The fact that that's also sitting right at 91, um, right? The fact that that's sitting right at 91, um, yeah, I think that's probably a decent area for buying. Um, Again, I'd like to see the confirmation come out of it just to be sure. I don't think it's going to be a quick spike down again, but right now, I hate to say this, but I think 91 is probably the base bottom. Again, there's enough buying in there, enough chop to show us there's buyers there, and then the backstop in. You're gonna have, futures traders kind of front running this one. So, yeah, I think that one's probably a little dangerous, but I think there's probably long in there. Now, natural gas, on the other hand, again, we knew natural gas was going to be high, right? We knew we had the contract rollover and everything like that. So, again, the question was whether or not it would hold there. We had zones up here. We mentioned 297. We got close. We got to 296.8. So, weird an area right now. I do like this. This is a zone that we had talked about before, and that's kind of where the contract rollover put us and it kind of Harry Pottered us off of it. I think it's good because we opened in it, we came through and we used it, and then we used it again. I think this is a pretty decent trade right now to take back short again when it's that time, right? We're not quite there yet where it's that time. Um, but when it does, I'd like to know when it breaks through that level at the 284 mark. Because again, people will look at this and be like, oh, we can fill that gap. Um, yeah, look, natural gas trading higher ahead of fresh storage data. Um, Yeah, I think there's probably. I would say right now, after obviously the big gap yesterday and this powering forward, coming up this area sellers, I would say be looking for a natural gas short right now. We don't have the top end that we want, right? We're not interested. It's not giving us the candle we want, and there's a little bit of a pullback. I would say this probably running into an area where there's going to be exhaustion, and we're looking for a turn and roll back down. Um, yeah, look for a short, right? Just so you guys can see the zone. This is the zone we're dealing with, right? This little kind of test right here. That's the zone we're dealing with. Again, there's a peak as a new top, but it kind of popped in and then launched itself off. So, um, yeah, I would say that again, look for a short. If we can get any type of basing, that's where you pull the trigger. Gold, gold basically flat. You can see from yesterday at 2 o'clock, it has just held. Now it did actually go through the zone, and again, it kind of based in here, and we knew it was a larger zone. We were kind of playing with it yesterday. Kind of hit it a few times. All the basing here, again, gold. They have no idea what to do with it. Now silver. Typically, silver is double what gold is. So, gold has been a little bit more in touch with the interest rate scenario. It's basically just flatlined. It's stuck down here. again, I think 1872 is pretty low in gold. Again, they say that we're done with inflation. People are saying we're at our target. We don't need to do it anymore. If suddenly the tone is we're done, you know what? We don't need to raise interest rates anymore. We're just going to hold them now. I think gold is a buy. I hate to say this, but I think gold is a decent buy. Um, I think watch this one as we get closer. See if we start to get any trend in here. Right now, it's just really holding. Buyers are really supporting this one. They don't want to go any lower than 1870. Basically what 1871. If we can maintain this low down here, and then again European session, we don't start moving. I think gold's a buy for tomorrow. I think we're looking at this one as a decent pop. Now silver's moving, and we talked about getting this. And remember, we drew it yesterday. We're talking about coming back in, and it did. It actually 3 o'clock this morning. So we drew it, and it's funny. We look at this. So we drew the candles. I missed the candles by a little bit. And again, this was just so you guys know. I'm gonna move this other way, right? There's the risk. So I missed it by one candle, right? There's your green, there's your red, and there's your green higher. And what did it do? It pulled back to it. So kind of funny how that works out, right? Right? Green, red did not go as low, and then the green close above was right there, and then boom, it pulled back and took off. Not a monstrous push off by any means or whatever, and it's pushing up. There's no sellers in this one really until we come up to about 2279 ish. Here's where the sellers are probably going to start stepping in. They're not massive amounts. It's not like an automatic news trade. Like, yep, got to take it. But overall, not really. Yeah. Hmm. Yeah, kind of same feeling. I think sellers come back in again. It is a little bit high compared to what gold is doing. It's basically flat, but it's extending a little bit more, obviously a little bit higher of a beta. I think if it does pop up, I think it probably runs right back down to the same level. It looks like, again, unless anything major changes, it looks like we're going to be floating between the 22 and 23. And again, the closer we can get that 2250, I think is where we should be for that news tomorrow. But again, right now, again, man, if that PC is bad tomorrow, I feel like silver and gold take off. I feel like the Fed's gonna be like, "We're here. That's it. No more raising," and then that gives us a stage where inflation can start to grow again. If there's going to be officially no more cuts, so yeah, yeah, I think that's pretty bad. That's pretty bad spot there. All right, VIX pulling down a little bit. Everything's trying to creep. The dollar again continuing to deteriorate down. The question is this loading up for a strong dollar movement tomorrow? Now, again, we were calling for dollar weakness all week, and again, we know why we got it. Everybody was so worried. Oh my God, they're not gonna cut anymore. We're not gonna cut this year. And then now it's kind of like the realization's there that we may be there. It's a nice European Open, nice candle, European Open. So again, we're kind of loading up. So let's see what we got ES wise. When I looked at them earlier, they were pretty choppy. Yeah, you can see 845, 930. Yeah, again, it's just flat. We're just inside. Would you have traded this one at the open? No, no. I mean, it did take off. The 915, yeah, it did take off, but there's nothing there, right? No trade, and we're basically inside. So, unfortunately, wow, yeah, they went above the Globex high and they nailed them. NQ. No, we were sitting down here already. It was already too low, and now it's pulling right back down again. Look, here's your open. There's your open. We're pulling right back down to the open. So technically, we're still above, even though it's red. All right. Looks like we're going to be inside, and I would say for this one, if we start to get negative today, which again, the negative people are getting really negative. There's probably our target right now for shorts. There's your shorts. Same thing. Look, inside from the peak at 830. And again, base down here 930, and we're smack in the middle. So again, really, really, really flat. Russell's the only thing. We talked about it pushing down. It did. Thursday, it kind of went high, and then again, it's pulling right back down to the open as well. So yeah, we continue to push lower. Yeah, we're below that 1800 again. So yeah, it looks like all the indices are really, really flat. People are really, really confused about what to do. Um, yeah, Yeah, I was gonna say I don't think none of these are opening print quality trades today. I mean, I guess there was a confirmed level here, but 7:45 is when it took off, and then 8:45. So nine's over here, 9:15 is right there. So no, nothing as far as opening print. The data has scrambled everybody, so they're all confused. Like, what do we do with this? Holy crap, 1.7. And again, I think this is very very surprising. The price index. Um, you can see normally it's like by like point 0.1, right? Point 0.1, point 0.1, point 0.3. So I wouldn't be surprised if there's an adjustment on that one. So yeah, um, Uh, traditional economic view may cause overshoot. Well, yes, they said they were going to go past what neutral was. Yes, they said that they were going to go to the restrictive territory, which is an overshoot, and then hold it there for quite some time until it was down. So we don't have entrenched inflation. But he's like, nah, we're going to overshoot. Yeah, I got it. Okay, I'm not sure what he's doing. I'm not sure what he's doing. But anyway, that's it for today. As I said, tomorrow there's some big data. This core PCE technically is the biggest gauge. Is what the Fed looks at the most. Although, again, the news article is like, well, the Fed's going to ignore it tomorrow because it suits us. I don't know. And then consumer sentiment, you're going to see Williams speaking tomorrow. And again, you're going to start off early with that European data, that flash estimate. And we'll see what the adjustments look like, what the forecasts are. I feel like we have a reversal for the euro coming in now as well. So, yeah, unfortunately, kind of a boring day again. We're kind of in that stage where people are just so confused. Are we done? Are we not done? Is the job finished? Nobody has any idea. So it's causing a lot of turmoil out there. Yeah, so with that, let's go ahead and do our drawing for the day. Got our 4 in. I'm gonna give it. I'll give it till 3. I'll give it 40 seconds or 35 additional seconds today because we normally go a little bit 30, but I was a little bit off today. So I actually clicked it earlier as we were doing the coffee incident. Yeah, the coffee incident. That's what we're gonna call it. The coffee incident. Yeah, fun, and more fun. 15 seconds, and we'll close it down. We need some music here. Now I gotta figure out where the heck. So I gotta hide any type of like electronic wipes, bleach wipes, any like thing like that, because Kip takes them and he likes to like pull them all out. And it's like he does it with his own wipes too, which are just water. He thinks it's great. He's like, yeah, let's throw them off. Now I gotta figure out where the heck I put them so I could hide them from Kip. It's my biggest problem. I'm gonna put this somewhere special so I don't lose it. Right? I'm gonna put it somewhere safe, right? So I don't lose it, and then I lose it because I don't remember where the heck I put it. Yeah, such is life. Anyway, winner of today's drawing is Ernest. Ernest takes it. Ernest went big today. Stop him Marina streak, right? Ernest won with 2 the other day. He went in with 10 today, but he got stopped on the last one. So Marina was on that streak there. So let's give Ernest his 25 for the day. There we go. 2-5. All right. I'm out here. I'll see you guys tomorrow morning. Hope everybody has a great day. Keep your fingers crossed that the truck comes back today. Again, this better be the last fix for a long time. Guys are driving me nuts. But thank you so much for joining me today, and I'll catch you guys tomorrow. Have a good one. Take care.